The World Bank is the most important finance development institution in the world. This morning, we listened to Terry indicate that the investment in Africa by the IFC went up sixfold from 2004, from 400 million to 2.4 billion. And I looked around and there was a lot of nodding of approval at that. And I was kind of surprised because for me, that really almost seems criminal. To put that into perspective, I could do that two ways. That's a significant percentage less than 1 penny per person per day on the continent. And I wonder if anybody here thinks that that's acceptable. Another way to put that in perspective, Beijing spent $40 billion getting the city ready for the Olympics. That's 16 times as much as the IFC spent in Africa last year. So one challenge I have for Terry, if I get invited back next year, is that he comes up next year and says, this year we could say we've spent a nickel per person per day on the continent, and I'll be very pleased. And I hope everybody takes the opportunity, since you're in Washington, to walk down, visit Mr. Zellick, and say that a fraction of a penny is not good enough. The other controversial comment I need to make really quick, and I'm going to cut into my time, is he also said that the African portfolio was the most profitable portfolio. That was very disturbing for me. Africa is the continent that's most in need of that development capital, and being the most profitable portfolio means one of two things. You're charging way too much for your money in a place that deserves much more aggressive financing than that, or your risk profile is much too conservative. You're not pushing the boundaries. So I would also challenge him to come back next year and tell us that he's happy to report that the African portfolio is the least profitable portfolio at the IFC. And I hope all of you will flood the switchboards and get that same message across. Okay.
So,
sorry.
No.
Okay.
So before you go, okay, so I am going to give you, I'm going to start the clock again, right? You've got 4 minutes now to do your whirlwind tour. Okay. But Bruce, you're coming to our management team. We're going to talk about this. Thank you.
Oh, good. Thanks. We're a development group. We spend a lot of time in Africa. We look at problems. We find ways to solve those problems and make money doing it. I'm going to give you 4 examples of mega projects within our portfolio. The first being the Buchagali hydroelectric project. I guess it doesn't go backwards. The problem, Uganda, landlocked, relies to a big extent on oil for its electric power generation. That oil takes a 3,000-kilometer round trip by truck trip to the power stations to produce oil. Result, you use the equivalent of almost half of that oil to generate that, to get it there, to generate that electricity. Solution, the Buchagali hydroelectric project, approximately $900 million project. A dam on the Nile, which will almost double the electrical capacity of the country. This is one of the conventional, multilateral conventional financing projects, which the IFC had a huge hand in pushing forward. We had the European Investment Bank and FMO here, all important parts of the lending group to this particular project. As you can see, the project is quite advanced. We'll actually be generating first electricity third quarter of next year. Extremely important project for the country. It's going to significantly reduce the electrical tariffs. 100 years from now, this project will still be operating, and at that time, with the debt fully amortized, will be producing electricity almost free. In the meantime, feel free to tell you that we are looking to earn somewhere around the 19% after-tax rate of return, if you're wondering what kind of returns are available on mega projects.
That would be one of our profitable investments.
Yes. Okay, problem 2. Up until 18 months ago, East Africa was the only populated part of the world that had absolutely no international fiber connectivity, with over 300 million people relying almost exclusively on satellite, which is very expensive and less than ideal performance. Solution was CCOM, a $650 million, 16,000-kilometer undersea fiber optic network that connects all the countries of East Africa to India, and then a branch through the Red Sea and the Mediterranean across France to London, which connects to all the European and North American cables. This went operational 1 year ago. We initially priced the capacity, the bandwidth capacity, 90% below the price of satellite bandwidth for a much higher performance product. I can happily say a couple months ago in Nairobi, I got 100 megabit download speeds, which is twice what I was able to get in my office in New York City. We think that's going to be extremely developmental for the continent, for that part of the world. Our base case had forecasted first-year growth rate in Tanzania, for example, at 200%. We just completed our first year, and we actually grew at a compounded 200% per month over the first year. We're forecasting that back office and call center jobs in Dar es Salaam, in Nairobi, will number somewhere in the vicinity of 20 to 25,000 over the next couple of years as a result of a very articulate, well-educated, English-speaking labor pool there. Since then, additional cables have been built, including one that IFC is involved in, EASY, which will continue to drive down bandwidth speeds in East Africa, and I think be a big spur to development. One last key thing here. We raised $225 million of equity in this project. All of the equity was raised in Africa, which has the double benefit of not only are the jobs from the project created there, but the profits are reinvested or remain within the continent.
Okay, Bruce, so I'm going to, you've got a slide each on each of the other two, okay? Because we're really...
Am I done?
Yeah.
Okay.
So you can tell us what the other two are, but...
Third mega project, and this is really a mega project, another one that IFC is involved in. Problem, Republic of Guinea, West Africa. 40% of the world's reserves of bauxite, what you make aluminum out of. The biggest exporter of bauxite sells for $20 a ton to Europe, North America, where they turn it into aluminum oxide at $400 a ton. Solution is to build that refining capacity within Guinea. The obstacle there is that no infrastructure exists. So to build a modern, competitive refinery, you have to build everything: ports, roads, rail, electric generating plants, water supply, bridges to get your trucks across. And to date, we've spent about $600 million just on building infrastructure to be able to build the project when hopefully it closes financing later. I'll skip our fourth one because I don't want to use up time, but the fourth mega investment is in the agricultural sector. We've embarked on ultimately $900 million investment in palm oil in West Africa. Problem being West Africa importing palm oil from Malaysia and Indonesia, despite the fact that the oil palm tree originated in West Africa.
Doing business in Africa, you can't afford to be without Africa Investor.